How in the heck is a seasoned realtor going to utter the words out loud that the record high interest rates we're experiencing right now might just be the best thing to happen to buyers and sellers in the 19 years I've been in the business? And how is that same realtor going to combine record high interest rates with Stoic philosophy to help you make the best quality real estate decisions you can? Well, I'm going to explain it to you and you're not going to want to miss it. And as a bonus, I'm going to explain it to you in one of the most beautiful places in Dorado County, Magnolia Ranch and the South Fork of the American River. I'll talk to you at the next stop on our hike. So these record high interest rates that peaked at over 8% and are now down into the mid 6s have dramatically slowed the real estate market. They've kept buyers on the fence and kept sellers from selling due to the lock-in effect of not wanting to lose their 2.5% to 3.5% interest rates, and who can blame them really? So how on earth can I think this is a good thing? Well, to answer that question, we've got to get stuck right into the 5 different real estate markets that I've experienced over the last 19 years in the business, so I can explain how these high interest rates are the best thing to happen to buyers and sellers in that time. But to answer that, you're gonna have to meet me down the trail. So market number 1 was the subprime mortgage bubble market. Now this is when I started and money was easy to get. If you had a pulse, you could get a loan. In fact, you just had to tell them what you made and they took your word for it. Even worse than that, some unscrupulous realtors and lenders would say things like, "You sure you only make $100K a year, not $130? Because according to my chart right here, a plumber can make up to $175K a year. So at $130, you're right in the middle of the range." Now, with money being easy to get like that and relatively cheap at 6% interest rates, the market was flying and it heavily favored the sellers, putting our buyers under pressure. If I showed a home to a buyer and they liked it, we'd sit down right there at the kitchen table and write up an offer. We'd snap a picture of them in the living room or in the front yard and put it on a buyer love letter and send that all over to the sellers with our above asking friendly terms offer and hope we could be the winning offer. That's right, when I started in this business, we were still writing offers by hand on paper. Now look, this kind of market is terrible for buyers. It's hard, stressful, and expensive, and it encourages buyers to make bad choices, like waiving appraisals, waiving contingencies, and not doing a full slate of inspections. So I spent my first few years in this business trying to convince buyers to do a full slate of inspections and to turn down the crazy pick-a-pay loans that were being presented to them. These kind of markets, when they put buyers under pressure like that, strip away the guardrails that are in place to keep our buyers safe, and that's simply not a good thing. For those of you that are interested, we just took the Gurley Loop Trail at Magnolia Ranch, onto the Connector Trail, and down onto the South Fork of the American River Trail. If you hear that noise in the background, that's a little creek back there, not the South Fork of the American River. I'm gonna get you an amazing view of the South Fork later on in this video. Now, on to market number 2, the Great Recession market. Now this is a huge topic. I could do an entire video series or write an entire book on this topic alone. But the Cliffs Notes version is, once people realized they couldn't make the mortgage payments anymore because they were underemployed or unemployed, or they couldn't keep up with the rising mortgage payments due to the rising interest rates on their adjustable rate mortgages, they did the math and realized they put no money down, they've been making the least payments possible, and had no skin in the game. So they simply put their keys on the counter and walked away, leaving a flood of listings coming onto the market and driving prices way, way down. Now, in some ways, this was an excellent market for buyers because there were deals to be had and money to be made, which was great compared to the market we had just come out of. But here again, buyers found themselves under pressure because of the way the contracts were being structured at the time. Now, the properties that came flooding into the market were often split into 2 categories: short sales, which are pre-foreclosures, and REOs, which are post-foreclosures owned by the banks. Now, the banks, due to the way they structured their contracts, put the buyers under pressure once again. They often wouldn't negotiate on appraised value, leaving buyers to make up the difference in cash. They were mostly exempt from the disclosure process, meaning the buyers lost all cultural knowledge of the homes, and oftentimes they wouldn't even pay to turn on the lights and the water so that buyers could do their inspections, leaving buyers to decide whether or not they should do that or skip their inspections altogether and take the deal. Again, this market put buyers in a hard position and stripped away the guardrails put in place to keep them safe, and that's not a good thing. Now let's head on down the trail a little further and talk about market number 3. All right, market number 3 is the pre-COVID recovery market. This went from the end of the Great Recession to the beginning of the COVID-19 pandemic, and it was a reasonably balanced and even market at first, with buyers having the time and space to get comfortable with their purchase and have normal transaction timelines. But as the market continued, it became a rapidly appreciating market, and buyers were once again being pushed up to prices and payments they weren't comfortable with and having to make compromises on inspection timelines and contingencies. It was a brief period of normalcy, and then once again, buyers found themselves under pressure. For market number 4, we're gonna head on down the trail. Before we get to our next stop and market number 4, if you get to the end of this video and you still have questions about interest rates or whether now is the right time for you to buy or not, feel free to reach out to me via the contact information on your screen or in the description down below. I've been doing this for 19 years up here in Dorado County. I've helped hundreds of families just like yours make high quality real estate decisions, and I'm always happy to help. Market number 4 was the COVID market, and I'm sure you all remember the COVID market was absolutely bananas. The largest number of multiple offers I've ever seen in 19 years of doing this. People were waiving appraisals with the offer, paying the difference between appraised value and contract value in cash, and in some cases doing few, if any, inspections. It was nuts. This is the most pressure I've seen buyers under in the 19 years I've been doing this. One young couple that I worked with that had an exceptionally tight budget, it took us 18 months and 10 offers to get them into a home that suited their needs that didn't get bid out of their reach. This was something I'd never experienced before. Sure, it had been tough on buyers in other markets, but it had always been doable. The COVID market simply made home ownership out of reach for many buyers and stripped away a lot of the guardrails that keep our buyers safe as fast as the offers were coming in. Market number 5 is the one we find ourselves in now. But before we get to that, I think people often assume that realtors really love the types of markets I've just described, but nothing could be further from the truth. Any realtor worth their salt wants their clients to be making the highest quality real estate decisions they can, and they want to put them in a home that they will love and enjoy for years. The best part of my job is helping people achieve the American dream. But more on that a little further up this big hill. Look, I've said it before on this channel, but it bears repeating. Real estate built the middle class. It is often the first rung on the ladder out of poverty for families, and it finances college education for kids whose families couldn't finance it any other way. Owning a home will absolutely change your life. But getting it wrong can become a financial albatross around your neck that takes decades to recover from. So I genuinely dislike any market that has a distinct advantage for one side or the other, or that puts one side or the other under pressure. That pressure causes people to make bad decisions, and the consequences of those bad decisions are what keeps a good realtor up at night. All right, I got a little view of the South Fork of the American River behind me, and if that view doesn't make you want to move to Dorado County, then the one I'm going to show you in just a couple minutes will. But look, if you made it this far and you're getting anything out of this video at all, hit the like button, hit subscribe, hit the bell, check off all notifications so you don't miss the next video with crucial information to help you make the best quality real estate decisions possible. All right, if that view behind me right there, the South Fork of the American River, doesn't make you want to move to Dorado County, then nothing will. Now let's get out of the sun and we'll talk a little bit more. While we're talking about this, I don't particularly think those kinds of strong sellers markets are great for sellers either. For one thing, most sellers become buyers right away, and so they suffer alongside all the other buyers in the marketplace. For another, the same guardrails put in place to protect the buyers protect the sellers. Contingency periods and inspection periods give the buyer time to make an informed decision, and that's good for sellers. All of those things protect the seller from lingering liability after the close of sale, and removing those guardrails isn't good for either side. This brings us to market number 5. That's the market we find ourselves in now. I'm not going to do a deep dive into the market in this video. If you want to know where I think the market's going in 2024, you can watch this video up here. But the basics again are we have low inventory, keeping it a strong seller's market, and we have high interest rates, keeping the buyers on the fence and the sellers from selling because they don't want to give up their 2 to 3% interest rates. This has made the market dramatically slow down. So why on earth would I think this is a good thing? And how does it intersect with Stoic philosophy? I'm going to tell you that at the bottom of this hill in our next beautiful spot. All right, we're nearing the end of our beautiful hike here today. So why is it that I think these high interest rates have been such a good thing? Because they've given buyers and sellers a rare opportunity to pause, reflect, and evaluate their real estate decisions that we haven't seen in the nearly 2 decades that I've been in the business. Does that sound crazy? Well, let me explain using 2 bits of Stoic philosophy. The Stoics have a concept they call amor fati, which means lover of fate. See, they believed you didn't just have to accept the situations you found yourself in life, you had to love them. Now, Marcus Aurelius, perhaps one of the most famous Stoics, said the impediment to action advances action. What stands in the way becomes the way. Now, when I make these videos, I try to address the largest problems you're facing as a buyer or seller in the market today. And inarguably, the largest challenge faced by buyers or sellers in the market today are the high interest rates. But to borrow from the Stoics, what stands in the way becomes the way. These high interest rates have given buyers a chance to pause and watch the market and plan. They've also given them many, many more months to save up money and repair credit, because creditworthiness and a large down payment are crucial to getting the best payments in a market like this with higher interest rates. It's also caused buyers to be a lot pickier about the home they're choosing. They know they're paying higher prices and locking in record high interest rates, so they want to be sure this is a home that will meet their needs for years to come. They've also put back into the market the guardrails that keep our buyers safe, allowing buyers to have full contingency periods, do all of their inspections, get full knowledge of the property they're about to purchase so they can make a high quality real estate decision. And that is a great thing. Now, for sellers, these higher interest rates have given them a chance to pause and reflect on whether it's better to stay or to go. Many people get locked into this bigger, better cycle, and their home size and mortgage payment continue to grow as they age. These higher mortgage payments leave less money for things like kids' college funds, travel, or saving for retirement. Having these lower mortgage payments and staying in their homes has allowed many sellers to better weather this tough economy or to redirect their money to other things that enrich their lives. Now, in 2013, I was traveling in Costa Rica with my then pregnant wife, and a friend who owned a rafting company gave me the opportunity to guide her down the Savegre River for the day. At the end of the day, as we were putting away the boats, I asked the owner why, after coming to the US and rafting our rivers and starting a family here, did he decide to move home to Costa Rica to start his rafting company. He answered with an old quote: "The intrepid man searches for gold around the world. The wise man finds gold underneath his feet." Simply put, these high interest rates have allowed sellers to find the gold that's underneath their feet. Look, I've been doing this a good long time, and I know the interest rates will come down. In fact, I believe they're going to come down this year. And when they do, the market is going to go crazy, and buyers will find themselves under pressure once again. My hope is that this pause induced by the higher interest rates has allowed buyers to better prepare themselves for that next round of real estate craziness, so they'll be more likely to keep the guardrails in place for themselves when it hits. I also hope that sellers now have a chance to make a clear-headed decision between the real estate profits available to them if they sell and the benefits of maintaining a low mortgage payment moving forward. Either way you slice it, these high interest rates have allowed people to make better real estate decisions, and in my book, that's a win. Amor fati, I'm choosing to love this market that allows my clients to make better real estate decisions. What do you think? Do you think I'm crazy? Do you think I'm right? Let me know in the comments down below. But of course, the interest rates really don't matter if you don't know whether you're the type of buyer who should buy in 2024 or not. So to figure that out, watch this video up here. And as always, thanks for watching, and I'll see you on the next one.